Our next guest on the show now, Pashupati Advani, founder and chairman of Global Foray, is with us. Pashupati, pleasure having you on. Thank you so much for joining in. So the market has caught a cold and it's not going away. This viral flu, it's been on for a while now. What do you think? I mean, are we anywhere? I know this is like one of those redundant, retarded sort of questions, but I'll ask it anyway. Do you think we're close to the bottom?
You know, it's just like you put fuel on on the fire, and the fire keeps growing bigger and bigger, and it doesn't look like it's going to stop. But it's a slow death. That's the sad part. It's not, you know, they haven't just hit you over the head. It's like going down slowly. And you know, one of the other challenges is, which is the wild card, which is the second man in the Oval Office, which is Mr. Elon Musk, who's got his own agenda. And you know, one of the reasons why I can see a Bharti getting hit is because he thinks he's going to try and get Starlink into India, and that's going to cause disruption in the whole telecom space. It's also bad for Vodafone. It's also bad for Reliance, but mainly Bharti is the pure telecom play. So I think that's what's hitting it. The second thing is that if you know, you've got these things of not wanting to give jobs to non-Americans, so that's also going to, you know, throttle the IT companies that we've got. So that's a sector I've actually not been very bullish on, simply because I felt that that is going to happen. And also you've got AI. You just mentioned it. You had Salil Parekh also talking about it, that you know, he's trying to pivot, but it's not so easy. And machines are replacing. I mean, my son works in AGI. He's getting machines to do the programming of this thing. So that's the challenge. So, you know, Are we able to, you know, stand up to it? I don't know. Though they do say that Indians have all the IT people, but those IT people are sitting in America, not in India. So I don't know how it's going to work, but we'll see.
You know, Shireen put that question also to both HCL Tech's CVK as well as Salil, and exactly asking that what happens with all this protectionism. And their reply was that they have increased their nearshoring. I mean, they're stating the obvious. They've had to do it, kind of increasing the headcount out there and making sure that they have enough feet on the street out in those markets. And that'll have a cost implication always. So we'll get to that. So IT is not really something that's finding your fancy. But what else have you been doing? Have you been buying anything where you're finding better valuations?
One is obviously looking for bargains. There's a couple of reports out there that are looking at, you know, smart guys looking at bottom fishing and choosing, I would say, you know, off the wall obscure stocks. Fortunately, I've been a bit of a gold bug, so I've done okay in that space, and I actually increased my exposure about a year ago. So I'm happy about that. But you know, the gold price going up has actually not resulted in the jewelry people going up. If you were in jewelry stocks in India, you've not really done that well. But I don't know. It's you have to kind of hit your spots and say, okay, what is going to do well in India? I'm, you know, like a broken record. I say government is going to continue to spend. Government is going to continue to do infrastructure. Government is going to continue to do defense. Though I think the defense model is going to change. We're going to have to buy directly from the US rather than getting them to manufacture here. So, so this protectionism is going to hurt us. And we're also going to be buying American oil, which is more expensive than Russian oil. So that's going to have some effect and create inflation. So it doesn't look so good for the markets. And I think that's something that we have to accept. And where do you get out? You don't, I mean, it's very difficult to say, you know, you've got good stocks and you want to hold them, but you're going back to basics, which is high dividend yielding stocks, maybe PSUs, maybe companies that benefit from the government spending. Those are the companies that you need to be in. And I think, you know, that's where we're at.
Hi, Mr. Advani. Good afternoon. Good to see you. And besides the threat for the telecom companies, the other factors that Bharti Airtel, you know, late on Friday evening, they put up on the exchanges that they're looking to increase their stake in Airtel Africa by 5%, which means $320 billion goes out, which the street is saying it's okay, but will that put any risk on their dividend payouts? You know, that's something that's a bit of a question mark. I guess that's causing some nervousness as well. But Mr. Advani, give us a couple of stocks. You know, in the past, we have spoken about some infra names that you've liked, some of the new age companies in the past, you know, you've spoken about those names as well, like a Paytm. Give us a couple of names. You know, the markets have come off, but there are individual stocks that have come to good levels. So if you could name two of them for us.
So I'll tell you one thing. Somebody sent me a list of the worst performing 1,000 stocks. Okay, and there are some good names in that. They're off 40 and 50%. Things like maybe a stock like REC and Power Finance Company. Again, you're looking at stocks like that. Okay, and it's off again today, but I think the pharma stocks are also okay. They're cleaning up their act. They are the generic, host to the world. I think that those are also worth buying and nibbling at. And I think if now's the time to look at good stocks. I am not very. I'm actually bearish on banks, and I'm also bearish on IT. So that means that's more than half the index if you take both those sectors. If you take PSU banks, private banks, IT, you're at pretty much 40+%, maybe even 50% of the indices. So that's what's pulling it down, and that's what's dragging. And I think that's they're trading at high PEs, and people are just selling them to because they have nothing better to do.
What you're saying, Pashupati, is that the old themes, maybe they'll still keep running, which is capex and infrastructure, maybe not as hard, and you'd look for high dividend yield plays. Any more examples of that?
Those tend to be PSUs. Those tend to be PSUs because, again, the government is investing. They also want to get high dividends. So that tends to be, the oil companies, the oil marketing companies, they're the ones that are paying out decent dividends. REC is another one that pays good dividends. And of course, people are going to be shifting towards things that look like fixed income. So then, even REITs will be okay, generally, as a sector. Because they're overvalued in terms of the amount of property in them, and they've got rent, so they're paying good dividends. So I think those are the places to be.
So conservative is the approach, Pashupati. Hearing you're looking at REITs, you're looking at quasi debt plays, you're looking at dividend plays. What about this whole thought of a recovery? I mean, we tend to it's human nature. Either we're too optimistic or too negative. Or maybe the truth lies somewhere in between, you think? Is there still that hope of that recovery? Rural is doing well. Nigel's been pointing out a couple of data points as well on, electricity demand as well, toll collections. It's not too bad, the ground level data. So would you at all look to play any sort of recovery in consumer or anything else?
So obviously, electrical power, we're in great shortage. So everybody who's into electrical power will do well. That obviously means Advani is at the top of the pack. There's Tata Power also, which is doing well. Then anything, transformers, equipment for wires, because that infrastructure is under solid pressure and we need to increase. So I think those are definitely the sectors that have to do okay. And the government is going to continue to spend in those sectors and continue to make sure that those bills get paid, and so that the growth story in India continues. And we have a huge domestic market, so we do need it. And we're coming into summer, so it'll be interesting to see how the power producers and the states actually manage and make sure that we have power through the summer, because I think it's going to be a hot summer as well.
Okay, a hot summer, slightly cold market, but that's what we have right now. Thanks, Pashupati, very much for joining in and giving us some sense of how one can perhaps navigate this.
It's very tough to do, Surabhi, in a market that looks like it's falling on its own blades. But it is. We have to live with it, and we enjoy it. And unfortunately, we have to mark our portfolios down on a daily, weekly, monthly basis. So we cry and keep going.
But at least Pashupati has some gold, right? He's well hedged, and you're looking to hold on to the books of profits there.
I wish I had more. But I have some. I did shift some earlier in the year.
I missed the sovereign gold bonds, Pashupati. I chipped in every year, and unfortunately it stopped. So missing out on that one. But thanks a lot, Mr. Advani, for joining in and giving us your take on how do you see markets pan out from here on. By the way, the wee bit of a pull